You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 6th of March, 2017. We're going to go through all four of our ETFs, tracking the S&P 500, the Qs, which is, of course, the NASDAQ 100, TLT, which is Barclays 20-year Treasury Bond Fund, and lastly, gold. Let's jump right into the markets. The first index fund we look at, SPY. Like I said, the S&P 500. We continue to see it moving up strong on the weekly charts. We have our 6th week of up movement. I'd say 4 strong weeks of up movement in the past. Of course, the week just ending on the 3rd of March, that was Friday, we saw the S&P 500 up just a mere 0.06%, but it does continue climbing. On the weekly chart, we continue to see a buildup in the derivative oscillator, and we see that the PPO, the price percent oscillator, continues to kick up strongly, moving way toward the top. Now, as we dig into things a little more, we can see a little bit more happening. Our 2-day chart, first day of the 2-day chart on Friday, shows some weakening. We actually had the market sort of top off now again, we use Heikin Ashi candlesticks, which track the average pace. It's not your typical candlestick. You want to know more about Heikin Ashi, got a great training at Charting Wealth. We have a red open box, which means some indecision, some weakness as far as the market continuing its up pace. The good news is we continue to have movement well above the 2-day and, of course, the strong weekly trend line, but we do see some slackening there, although the market was up. And if we look at the 2-hour chart, we can see that it rolled over going down late in the day on the 2nd, Thursday the 2nd. It had been going down most of the day on Thursday, continued down in the morning up till noon on Friday, and then up a little bit. So again, the movement totally for the day, and again, we're using Heikin Ashi candlesticks. Sometimes it's hard to actually tell where it ended up for the day because of the way they're calculated, but what they do for us is they let us see the average pace. Average pace was losing energy, started upping some energy in the afternoon on Friday. Still didn't cross over going up on that 2-hour chart. The derivative oscillator did stop going down to the extent it had. Its bottom was at 2 p.m., so it recovered a little bit later in the day. What do we have actually going on? Because we've had a vertical crossover going up on the weekly chart since the 25th of November. So this is a long, steady climb up. Again, some weakening. Watch how it starts off the week on Monday the 6th. Those of you who are still in, of course, topped off at 240.32. That was the height at the end of the 2-day candle on the 2nd of March. So lots of great up movement. Now, let's go back to our weekly chart. Take a look at the Qs. Of course, we have been in the Qs for a while. The Qs crossed over going up on the week ending the 6th of January, and it has been a steady climb on the weekly chart. Many candles continuing to move up, and that hasn't slowed down. Derivative oscillator continuing to gain energy, as does the price percent oscillator. As we look into things, we see on the 2-day chart, had some periods of weakness as it looked as if things were topping out on the 24th, the 2-day candle ending on the 24th, and the 28th, of course, following the president's speech. We saw on the 2-day candle ending on the 2nd of March, a bump up nicely, and then like the S&P 500, bit of a bearing off, although the movement in price was up for the day 0.18%, and price movement still above the 2-day and well above the weekly trend line. We do see on the 2-day chart derivative oscillators losing a lot of energy, and the price percent oscillators continuing to come down, getting close to a crossover going down. So pay attention. We are close on the 2-day trend line, and we're close on the PPO, and we're losing energy on the DO. So cautionary note in particular, those of you who are in a weekly vertical crossover trade, you may have seen your top occur back on the 2nd of March. At some point, the market will retrace. It will sort of digest those gains, may go down for a while, may just digest for a while and then start moving up again. We're going to let the charts tell us what to do. So if you're still in that wonderful up trade on QQQ, please be cognizant of the weakening that we see on the first day of this latest 2-day candle, at least on the 2-day chart. What do we see on the 2-hour chart? We had a crossover in the afternoon on Thursday, the 2nd of March. Did bottom out, very similar to what we saw on the S&P 500, and started moving up around 2 p.m. on Friday. Still crossed over going down on that 2-hour chart. So pay attention to those things as we continue to move through these charts. What do we have next? Well, TLT. Remember how it weakened on us after the president's speech when we saw a big up movement in stocks? We saw that inverse correlation on bonds really slam down. Ended the week with a doji, which means lots of indecision. We still have a crossover going up. Derivative oscillators lost a little bit of energy on the weekly chart, but the weekly chart is still above the signal line as far as the PPO goes. So lots of indecision there on TLT. TLT was up about 0.25% on Friday, which was a nice bit of a recovery. Let's look at the 2-day chart. Not crossed over yet. Huge slam down on the 2-day chart ending on the 2nd of March. That was following the president's speech on the 28th, where the market just boomed and then crashed it was booming prior to the president's speech and then crashed after the president gave great news. And those of you wondering, don't forget, bonds and gold also tend to be safe havens when people are fearful of the market. Well, when the president gave such a rousing speech, even though he was attacked roundly in the press, the markets took it as a great sign, and we saw the markets boom. Consequently, the inversely correlated bonds and gold took a hit. And what we see going on now is a bit of a recovery. Keep an eye on this if you still happen to be in TLT. We did have that vertical crossover all the way back on the 6th. Now, most of that gain, if not all of it, had been lost if you stayed in. Hopefully, you took measures into your own hands and you saved some of your profit and did not have to cut your losses. But do be aware, if we do see a bounce off on this 2-day chart, you may have a good entry point. We can see that bonds did bottom out when we look at our 2-hour chart, and in the afternoon from 2 forward, we saw an up movement on the PPO, and we saw the derivative oscillator losing downward energy. So if things do recover, you want to get back in. Don't forget, at this point, you still have the weekly chart moving up. You still have the 2-day chart moving up. If you have a crossover on the 2-hour, if that's the way you like to trade, you could look at a potential jumping in point there. So just be cognizant of it. Nobody says you have to do it, but be aware. Last chart we're going to look at, as we always do, is gold. Now again, TLT, the bonds were up 0.26%. Gold, however, down. It's our only ETF that is down for the day on Friday. Gold down 0.06%. That's the exact same percentage that the S&P 500 was up. What do we see on our weekly chart? We see that gold has had a nice run up. It actually had its weekly vertical crossover occur back on the 27th of January, followed by 2 strong weeks of up movement, a bit of a weakness showing on the week ending the 17th of February, then strong up movement the week ending the 24th, more up movement, not as strong on this past week ending the 3rd of March. We don't have a spinning top, but we do have some down movement on an open box green candle. We do see the derivative oscillator losing a little bit of energy, and we do see the PPO not going up at the same angle that it had been. It's kinked over some. So losing some of that momentum again, but gold, and part of it based on the president's speech, gold being a safe haven like bonds. We saw gold take a hit on our 2-day chart after the president's speech on the 28th, took a hit both on the 2-day chart ending March the 2nd and the first day of the 2-day chart ending at the end of the week on the 3rd of March, Friday. So what do we look at what do we see when we're looking at these charts? We see that we're getting close to a crossover going down on that 2-day chart, and derivative oscillators already flipped over on us. And we've already well passed through the 2-day trend line, and we closed passing through the weekly trend line on the 2-day chart. That is not a good sign. We don't yet have a crossover on the 2-day chart going down. Getting close though. We can see a bit of light at the end of the tunnel though, as far as the down movement goes. Hasn't happened yet, but toward the end of the day, we did see the PPO start moving up, and we saw the derivative oscillator starting at 2 p.m. start losing some of its downward energy. So keep an eye on that. Again, if things cross over and stuff starts moving up strong after idiot hour on Monday and you want to jump into a 2-hour trade on that, you can sure look to do that. Why? Because you have the weekly and the 2-day still not yet crossed over going down on the 2-day or on the weekly. So there's potential to jump in and ride gold up a little more. We shall just see what we shall see. Now, folks, as far as things go that can affect you over the coming week, no news to report calendar events that we have seen for Monday. We do see on Tuesday the 7th, International Trade in Services and Goods is going to be reported for the U.S. about 8:30 in the morning. Then on the 8th, Wednesday, we've got 3 different things happening. Petroleum status report's going to be out, revised productivity and cost report, and the ADP, National Employment Report. Again, any of these things are super, super good or super, super bad, particularly the ADP National Report. That if the market's looking for really, really good news or really, really bad news, then yes, those can have some impacts. Nothing like a Fed meeting or the president speaking. On Thursday, unemployment insurance weekly claims report. Again, if things are in keeping with the president's positive attitude, then yeah, things might that might affect some things. Though it's same on Friday, the 10th, the U.S. employment report is going to be out. So again, if things are looking super, then the market may very well take that in stride, and you may see some more bumping up of stock prices, and you may see some degrading of the price of those inversely correlated ETFs, such as gold, such as bonds. That's where we are as we get ready to look at this coming week and check out these charts, see what is happening. I hope that as you have listened, you've been filling out your weekly market worksheet. If not, please run through the charts again. Make sure that you fill that out. You were to fill that out on the weekends. Remember, getting ready for Monday, your daily market worksheet is, of course, for Tuesday, Wednesday, Thursday, and Friday, actually preparing for those days. So we appreciate you being with us. If you've not already signed up for our text service where we will actually send you information when there are weekly vertical crossovers, those are the powerful changes in the market where we look to get in the following Monday after those crossovers occur and be able to ride strong trends in our virtual trades and investments. And we want to share that with you. All you have to do is text the words Charting Wealth, that's who we are, Charting Wealth, one word, to the numbers 33222 on your cell phone. So you just punch into your cell phone 33222 and then text the word Charting Wealth. That is something you'll really appreciate as we continue to see things happen. You'll get no more than 6 texts a month, so no more than that. If you want to help us out, of course, we always appreciate you going to our website, chartingwealth.com, signing up for our weekly and our daily podcasts that we send out to you. There's 5 of those a week at the close of the market every day. We record those for you and get them off to you, chartingwealth.com. We also appreciate you going to our YouTube channel and subscribing. How do you do that? Well, you just look up Charting Wealth on YouTube. We're right there. We're approaching that magical 2,000 subscriber mark. We'd really appreciate it if you help us get over that. Helps us with our metrics. And lastly, iTunes. Please subscribe to us at iTunes. Give us a 5-star rating. Say something wonderful about us. You can subscribe to our iTunes audio under Charting Wealth and also our weekly review and forecast, which is a video. But whichever one or both you subscribe to, please give us a nice 5-star rating. Say something nice about us. Folks, we do this all for you. We don't charge anything providing these reviews and this information. Remember, it is educational. We're not a stock calling service. You don't pay us for anything, and we don't provide anything like that. We want you to train with us. We want you to learn how to read these stock charts. It takes 10 minutes a day of practice. That's all we ask. Fill out that daily market worksheet, the weekly market worksheet once a week. You ask, what is this guy talking about? How do I get these things? You go to chartingwealth.com. Put in your first name, your email address. We will send you the latest video that we have prepared. And with that will be a wonderful little attachment that is going to have on it. It's our show notes, and it will have the links to the PDF for the daily market worksheet, the weekly market worksheet, the how to read a stock chart video, which you've got to listen to, 15 minutes of must-have information. That'll help you understand what it is we do every day and how important it is to read charts and follow them. In addition to that, you'll get the layout that we use at freestockcharts.com. We're here for you, and we just appreciate you. You have questions, problems, concerns, you can always write us, CW at chartingwealth.com, or just go to the website, chartingwealth.com. God bless. Hope you have a great week learning, practicing, practice trading, virtual trading, and investing in the market. Folks, you're going to get good if you will just keep practicing. It's all about perseverance. The market will not give up its knowledge and its skill set to you unless you commit yourself to it. So stick with it. Only the strong and the ones who persevere survive. God bless. Take care from chartingwealth.com.